I mean, while you were away, we've had this very interesting development in 1% beverages. When I say interesting, I mean the auditors have raised concerns about their balance sheet. And the stock went down, I think, 55%. Then there were concerns which have been raised about a lot of other companies where, how they're conducting themselves. The story for last week was that, okay, auditors are again raising question
What
marks
was the
about.
explanation from 1%?
Well, 1% will come out and say, look, there is no problem with them. We've not interacted with them formally on the channel, but these are the channel checks what we're indicating. Then was Deliberate, a company which you track. So suddenly there was a rumor in the market that there is a concern about accounting. The management came out and defended that, but by that time the collateral damage already had been done. But 5% higher for 1% beverages. Shyam Sekhar, good morning. Thank you for joining us, Shyam. It may be a very myopic trend, but it is a trend which is scary enough to blow it is a trend which is small enough, which everyone is taking notice of, that auditors are raising concerns about some of these mid-cap stocks about the accounting policy and corporate governance. And some of the stocks where concerns have been raised are stocks which are dominated by institutional investors and are recommended by some classic long-term decent brokerages.
See, I would not comment on individual investors or brokerages, but broadly, see, there is a common trend which has happened in this cycle. That is, we have not found quality ideas in which large sums of capital can be easily deployed. The supply has been very tight in extremely reliable stocks. So we have gone a few steps down the quality ladder, trying to find other things which could potentially qualify to be a great stock. And I think that descent has not played out well. And going forward, I expect more problems of this type to surface, because I think that ultimately, if you don't have stocks of good quality, going down the quality ladder never works, and that's something which is universal. Whether you're a sell-side brokerage, whether you're a HNI, whether you're an individual investor or a portfolio manager, I think that approach is bound to fail. The tragedy is it worked too well for a long period of time, making us believe that was for real. I think that is really the tragedy that is unfolding now.
Talking about tragedies, Shyam, morning firstly. Is it making a little uneasy to you, the fact that mid and small caps have corrected so much while the Nifty continues to hold out at 10,750? And if that were to be the case, do you think then that the sell-off in mid and small caps could get exaggerated now that you're yourself saying that we could see more of these corporate governance stories actually open up as time passes by? Are we likely to see more excruciating pain when it comes to the side markets?
See, I think when the markets are sideward as we are seeing now, this kind of a trend is not unusual. We must remember that we have given higher valuations to small and micro caps, bigger multiples than you would for established stable businesses. Now, if you are giving that kind of a recognition in terms of valuation, in order to sustain that valuation itself, the company would need to show performance and very clear, reliable corporate governance. Now, the challenges are twofold. One is, even to sustain the valuations which are prevalent in the small and mid caps, the companies are seeing headwinds in terms of higher commodity prices, higher oil prices and stuff like that. You also have margin pressures coming from cost of capital. Money is not available cheap. So you are seeing the pressures coming to these companies, which are the first signs of headwinds in a long time. The other challenge is that we may have overestimated the corporate governance standards in many of these companies, and when we develop doubts, sustaining the valuation becomes a significant challenge. And I think the large investors in these companies have understood or recognized these. They are the smarter ones. You also have another set of large investors who still believe that based on their personal reputation, they would be able to sustain the valuations of these companies and find new followers to buy into them. I think the greater risk is in following other investors, whatever be their reputation, into companies. Today, one should make his own assessment of what the earnings headwinds are, what the governance related issues are, and what should be a realistic valuation in which one would like to invest in these companies. I think that is the biggest need of the hour, and we need to go through this phase. I don't see any escape from this phase.
Selling in this market, Shyam, what's been the tone of your activity?
Sorry?
What has been, how active you have been in the month of May and in the month of June? Because the Nifty is not looking all that bad because of the polarized nature of IT and private banks, but rest of the market, I think cracks are visible.
Nikunj, I have chosen to be a microcap. So I am below the line of institutional starts. In fact, significantly below even where the portfolio managers populate. So I am even below that segment. So for me, this phase is probably a challenging phase as well as an exploratory phase. So I have been very active, and I have been trying my hand at many very small companies and new ideas and themes. So for me, it's an experimental phase. I know I will make a few mistakes going along, but it is the phase which I usually enjoy. And I think going forward, it will become more challenging and enjoyable. So for me, it has been personally a very active phase.
Explorer are you looking at right now? Where are pockets of interest within the mid and small caps, Shyam?
I am still looking at the rural space. I am more bullish on Bharat than on India. So I am looking at how rural prosperity will play out in different ways, how they will earn their money, and which are the companies that can play a role in earning that money, and which are the companies that will benefit from spending that money. I am also looking at domestic facing service businesses which have a good net worth effect and which will be reasonably insulated from any global factors. So I am looking at these two themes predominantly. I am also looking at the durables theme. So these are the three themes. So mostly related to Bharat, agriculture, and rural prosperity, and also related to urban services. These are the broad areas in which I am looking at. The companies are too illiquid for me to mention them because I think that I would not like to disrupt stock prices through public announcement of those names.
Give me a sense of a semi-mid cap or a semi-large cap which you've owned for years and you like the quality of the business. I mean, the endeavor for an investor like is to identify a micro cap, because if you get a micro cap right, the potential of making returns would be much greater and higher than Nifty, because that's the beauty of the market. If you can catch them young and see them grow, then you've got a classic compounder on your hand. But that does not happen every time. But there are some businesses which are well discovered, well documented, yet they have potential to remain compounders. I mean, a classic case here is, which everyone knows, is HDFC Bank. But apart from that, I was looking at even names like Motherson Sumi, Asian Paints. These are businesses which were popular 20 years ago, may remain popular after 20 years. But for those who've not bought these stocks, I think they are regretting. So which are these popular, known, discovered businesses or companies you're betting on?
Two companies I tend to like. I've liked them for a long time, but I have not been as aggressive in buying them when they fall. One is ITC and the other is Bata India. I think these two are stocks which on any correction one should buy, because I think these are companies which are not going to see much of obsolescence, and they are strong organized players in a growing market. The market is growing slowly but surely. So I think that these are two companies which I really like amongst the established names in the consumer space. So these are companies which we should buy if they fall for some reason, one bad quarter or something going wrong, or even maybe Suti selling. Anything like that should be used as an opportunity to buy these stocks for the very long term and hold them for a very long periods of time. These are two stocks which I think have played out very well over the last 25 years, and I don't see why they should not play out for long extended periods of time. So these are two stocks which I like among the well discovered names.
Classic businesses, Shyam. But my follow-up question on ITC is that in last 25 years, the cigarette business has become more like a matured business. Anti-smoking is something which is not a local phenomenon but a global phenomenon. B, if I look at the FMCG business of ITC, Shyam, I mean the turnover is very large, but for a company which is having a turnover of 25,000 crore for the FMCG business, profitability is not there. And similarly, if I look at the peers who are in FMCG business, companies who have a turnover of 20,000 crore, their profits are much higher and greater. So that is my only challenge with ITC, that the cigarette business is contracting, FMCG business is large, but they are not really making money. They're playing to the strength of distribution, they've got the market share, but yet they don't have the profitability numbers which should reflect with this kind of a market share.
See, I think they are trying to spend a lot of money to buy market share. That's quite evident. But you should see if they, within the FMCG space, they would be able to become significant players in at least a few businesses. And I think, for instance, in the biscuit business, I think that they will make it. They have the right products. They have got it right, though they are not in making money. And I think it's a classic case of delayed gratification. See, it's not going to happen soon. So you know that, right? Which means that you buy it when you're just paying the value of the cigarette business. So whenever it comes down, you only buy the cigarette business and treat the consumer business as an optionality. That's how I think I would play ITC. And I think that they will get it right in at least a few businesses which will become fairly large and significant contributors.
Strong conviction there on ITC. Shyam, always great to have you on the show and good to gather insights on what or where you're hunting within the mid and the small cap indexes.